Canadian dollar has been under significant pressure over the past few days. We've seen it sliding to the lowest level since 2020. There it is, still stuck below 72 cents US. Let's get more from Jayati Bharadwaj, global FX strategist at TD Securities. Jayati, thank you very much indeed for joining us. Give us what you think are the one or two big reasons why the Canadian dollar has been so weak.
I would say that, it's a mix of both local developments and also geopolitical developments. On the local front, we've had a Bank of Canada, which was dovish. They did cut by 50 basis points, accelerating the pace of cuts. BOC has been, one of the few central banks to actually say that, okay, inflation is at target. They have greater confidence in the fact that both inflation headline and core can sustainably stay within their target range, and they've also had growth moderate. That makes for a combination where they can, take off the gas pedal from tightening and allow monetary policy to ease, which is actually very different from where a lot of other central banks around the globe are. You've seen data in the US on the growth side come in stronger. You've seen the UK struggle with services inflation, but the same cannot be said for Canada, where both inflation and growth have come down, allowing the Bank of Canada to easily ease and in fact accelerate the pace of cuts. That has been one big factor feeding into the Canadian dollar's weakness. And the second factor, which actually has been play only over the last few weeks, has been this lingering risk of US elections. Markets seem to be finally pricing in the premium of a Trump presidency and the potential of that. And that has been, that has culminated into a stronger dollar across the board, which has, also hit the Canadian dollar.
Do you think the prospect of a fall in the federal government, the governing Liberals, is factoring into investors' calculations? As you know, the Bloc Québécois is threatening to yank its support.
Not yet. I would say, not yet. Of course, we started getting local political headlines, I think about a month ago, with questions about if, what will be the future of any coalition and, if a new confidence vote will be called. But I don't think CAD is particularly responding to those headlines yet. It's beta to, what's happening on relative rate divergence, and US elections is still stronger than what I would say is going on in the local, local political atmosphere.
And what is your formal call on the Canadian dollar? Do you see it staying weak, even dropping further?
Yes, I do think, it's hard to fade this move, particularly, before the US election, and particularly when we don't know the outcome of that. Of course, we can go into a scenario analysis of what different presidents mean for the Canadian dollar, but I do see the dollar stronger from here, on several fronts. On just the macro front.
The US dollar stronger.
Yes, the US dollar stronger versus the Canadian dollar. That's coming from the fact that, the US growth is still resilient. The Fed will have to be relatively more hawkish than Bank of Canada. When you compare the drivers of growth and engine in the two countries, the US still has an advantage where, a lot of the innovation and the AI boom is happening in this country, whereas Canada was relying on, immigration to drive productivity for quite some time. But even those channels are drying out. There's not a lot of, productivity and growth engine drivers that I can see in the medium term. That also feeds into relative equity outperformance, where US equities have seen a massive run and, an outperformance over Canadian local equities. And that can actually, magnify under a potential Trump presidency with tax cuts. So I do think the direction for dollar CAD here, is higher from here.
You are a bit of a tech enthusiast. I know you've spent a lot of time on Python, the programming language, and you did your Master of Finance at MIT in the Sloan School of Management. Do you feel that Canada's relative lack of global tech leaders, does that damages the international perception of the country compared to the USA?
Absolutely, I think it does, especially when you think about FX versus the US dollar. The only thing that I think actually works for Canada is that it has a lot of economic interlinkages with the US. So it is still relatively shielded from a lot of geopolitical shocks in the Middle East, a lot of, let's say, the tariff threats which would be imposed on China and Euro area, given its interlinkages with the US economy. So even though I think that dollar CAD is going to go higher from here, if you're in an environment where Canada can be shielded from tariffs, given with USMCA, CAD might outperform currency peers which are more susceptible to China and global trade outside the US. So the euro, the Australian dollar, the Kiwi, and definitely Asian peers. CAD will not survive dollar strength in that, but CAD can fare better than these other non-dollar peers, and that's something that I've seen quite a lot. Whenever we come back to a point of US exceptionalism, it was sometime early this year when inflation in the US was exploding. It was in July 2023 when growth in the US was very strong. In all those times, the CAD does weaken versus the dollar, but it actually outperforms its non-dollar peers, which is an interesting phenomenon that it has become more linked to a proxy US than just being considered a country in itself.
Jayati, thank you very much indeed for joining us. Jayati Bharadwaj.